Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, May 22nd, 2019. This will be a mid-market update. I want to cover not just the equity markets, but just do a sort of an eclectic mix of charts and various things I'm watching. So here's what we're going to look at. We'll start out with a brief overview on the broad markets. Not a lot has happened, and I'll get to that in a second. I want to hit on some of the things I've covered recently. We have the wheat trade idea, which hit our second target yesterday. I want to do an update on that, maybe mention a couple other commodities that are starting to perk up, like coffee. REMX, which are the rare earth metals. I mentioned those yesterday. That's the ETF. I'll hit on that. A couple individual stocks in the semiconductor arena, Qualcomm, Intel, and of course SOXX itself, the semiconductor ETF. We just recently hit our final target on that short trade, and I very well may add that back soon, is another trade idea, so I'll update that as well. Gold I want to just touch on. I've been doing a lot of quick updates on that. Pot stocks, I'd like to just talk about MJ. Get a lot of buzz in the trading room and a lot of inquiries on the pot stocks, so I'll touch on MJ. I don't have time to do an extensive coverage of that sector within this video, but there are quite a few individual charts that stand out, individual components of MJ, the marijuana ETF. And then finally, railroads we'll hit on. I've been watching the railroads for quite a while now, setting up as a nice potential swing short trade. So we'll try to cover all that and, not dig down too deep in any one thing, just touch on everything. Those are, of course, just some of the things I'm watching now. Starting out here with SPY, you can see what I've done is I've moved this downtrend line. I had it before, drawn something like this, and I've made what appears to be now a symmetrical triangle pattern. You can see coming off the highs. So you have a downtrend line here to watch and an uptrend line from below. And and when we hit this level, and I warned about this here, we're in no man's land. We're stuck between a major support, or what I believe to be a very important support, and a very important resistance level. And as such, I said we could just grind around here for a while. I don't expect it to last very long, but anything's possible. And more importantly, regardless of what I think will happen, until we do, that's what you're going to get. We could grind around in here for goodness who knows how long. But so that's what you're likely to get. But so far, you see this price compression. That's the nature of a triangle pattern, and these things can break either way. Respect whichever way it breaks. If it breaks to the upside, that will bring us up to challenge those recent highs around 289, 290, and a downside break could open the door for a move down to test the lows again at 279. I think if we get near those lows, we'll probably just take them out. I don't think we'll test, but we'll see. So that's kind of the bigger picture right now. And again, the takeaway from this, if you're running, if you're heavily long or heavily short the markets right now, you're probably getting whipped around. Well, I know you're getting whipped around. It's just the nature of the market going up and down. But of course, it depends on how much you have and what your tolerance every day is for gains and losses. But what it's going to do to you too is if you have a heavy position and you're keeping your stops relatively tight, they're going to take your shares from you on a near daily basis with tight stops. So again, you have to define your trading style and your time horizon. If you are swinging for the fences, which I am very open, I have a lot of core shorts right now, which I am open to the possibility of a move down that's going to just blow right past the 2018 lows. Maybe that doesn't happen, but if it does, those positions I've scaled in here. My stops are relatively tight. I've talked about that before, and it's all dependent on each position. But for the most part, I don't want to see us go much above those recent highs there. And the downside could be, like I said, could be very large, or we may just get one other thrust down. There's plenty of support levels along the way. Again, I don't want to do an extensive coverage right now of the broad markets because I do that in nearly bi-daily updates recently. So there are some potential targets as well for SPY. QQQ, same story. We're smack between support and resistance. And, you could probably drag that trend line like that. It's not as clean as the SPY. I had that triangle I just showed you in SPY a minute ago, symmetrical triangle. We can draw something somewhat similar right here, a little quirky on QQQ. But again, 178 or 186. As of now, we're towards the lower end of that range. tech continues to be weaker than the broad markets. You're seeing a lot of money moving into defensive issues in the S&P 500, and that that's what'll happen. You have utilities and things like that that will hold the S&P up when tech takes it on the chin like it has recently. Okay, I had a question. Maybe it was a couple of them put to me in the trading room today. Hey, Randy, if I'm not short, I want to. Where's the best place? Well, that's a tough one. Like I just showed you, really, on the daily charts, until we break down below the recent lows, it's a lot of noise and a lot of chop and slop in here. Ideally, was last week when we pushed back up to the upper bounce targets on QQQ and SPY, or even at these other targets to scale in there. And I'll still maintain that up to, but not above 186 on QQQ. Let's just keep it very simple, scaling in. And I give short-term resistance levels on the futures charts that I cover on these daily updates, as well as these 60-minute charts, and you can see them here. So any of those levels there, but again, you don't want to take probably a full position, depending on where you're at, of course. These are better prices. I don't want to see us get there. I'm going to say this right now. Sure, if we get up there, is that objective? Absolutely. Is it a better price if we are going lower? Yes, it's a better, more favorable price to short up there. I really don't want to see another run at those highs because I suspect they might pop it. Even if it's a brief pop, fake out move, I would prefer, it just fits better with the bearish narrative if we reverse, we never even come back close to testing those highs. We fail somewhere around here and we start to go lower soon. That's what I would prefer to see. Why? It just shows me what's in the market right now. It shows me that the buyers are dried up, they're gone, and that there's more sellers and there's a lot of trap longs wanting to get out on any bounce. So in other words, to put it very simply, the weaker the bounces are and the more they get sold into, the stronger the case is that we're going to head considerably lower. But if they continue to step in here and buy, and like I showed you, there's some charts, we'll get to those in a second, that are starting to firm up on some key stocks. Let's start there. Let's go jump over to Intel. Okay, I pointed Intel out last week. It has divergences building. Divergences aren't a buy signal. I always say that, and I repeat these things a lot because there's always new people coming into the site. Divergences are not a buy or sell signal. They are merely an indication that an impending trend change is likely. When buy signals come on, candlestick reversal patterns, breakouts from bullish or bearish chart patterns, breakouts above resistance, you can have a buy signal and a pullback to support. So there's Intel building divergences, deeply oversold. The stock hasn't been this oversold in years. In fact, the last time it was that oversold was right here back in 2017, and from there the stock rallied from that point up to the highs about 82%. Do I expect that to happen now? No, because of where we're at in the cycle, because of what the charts look like on Intel, what the charts look like on the semiconductor sector. But I will say, you're going to hit there's probably minimal downside. But Intel's only one of many stocks and within the semiconductor sector. But again, I have support down here around 43. If it takes another jog down to hit that level, oversold can certainly become more oversold. Although it probably wouldn't take us below the recent low readings if we jog down to 43, and the bottom of that support zone comes in around 41.60. So the point is the potential's still there. So if you are bullish, let me just be very clear on this. If you're bullish on the market, if you're bullish more so on the semiconductors, this is one of my favorites right now. I think the downside is minimal. You're talking a point or so, maybe 2 points if it's the bottom of that zone, 3 points, compared to the upside potential on Intel. Don't get married to it. Don't fall in love. It's just with any trade. If it takes out the bottom of that support zone, it's no good. But that's what Intel looks like. Let me get to the semis sector itself. SOXX. That's my proxy. Yes, there's a lot of other ETFs you can trade, but this tracks, SOXX tracks the PHLX SOXX Semiconductor Index. That's the longest standing semiconductor index out there. It goes back for decades. And it is also the same index that SOXS and SOXL track. Therefore, if you're going to trade those 3-time leverage, it doesn't matter what XSD, which is another semiconductor ETF, is doing, or SMH. They are all semis, but they're a different basket of semiconductor stocks. So again, this is the one that I use for charting purposes, even if trading those other leveraged, the ones I just mentioned. Okay, I've just flipped over to a weekly chart, 10-year weekly chart, and to me, absolutely nothing has changed. In fact, if anything, the bearish longer term, intermediate to longer term bearish case that I've made on the semis is only stronger now. We had a divergent high here, right here at this point. Big correction, pushed up, only extended those divergences, and therefore I'm expecting an even larger drop in the semis from where we peaked here at that divergent high. Beautiful trend line break, beautiful price action. On the scale 1 to 10, you can't ask for anything better in technical analysis than that. Doesn't guarantee it's going to work out. That's the thing. There are no guarantees in trading, no matter how good a chart looks. But 3 big red weekly candles so far, beautiful trend line break, divergent highs, PPO bearish crossover in play, overbought readings. Everything I like to see tells me that before all is said and done, the semis have a lot more downside, probably at least to that 144.20 area, and quite possibly more. If they go where I think the market's going, they're going to come down here, that 2015 high. So if you want a number from where we're at today, I think the semis have another 45% to fall. You're going to, and to swing that, you're going to have to ride out some sharp counter trend bounces, or if it's not your cup of tea, just stand aside. But I can't make a case to step in for anything more than quick tactical trades, maybe bounce trades. But even then, you have to be careful because you're swimming against the tide. So I just want to share my long-term thoughts, short-term thoughts. I am, considering recycling back in here. We popped up the other day. We went up to 188.23. There's a little gap above. If we go any higher, that may offer an objective shorting entry around 190. But so far, pretty impulsive rejection. A lot of this has to do with Qualcomm today. Let me get to that one real quick too. Okay, here's Qualcomm. I posted this in Trading actually 5 days ago today, on the 17th. I was asked my opinion on Qualcomm, and I shared where I thought it was going. I thought I showed you, it's a pretty clear case. You can see without fail, it said without exception. This is a decade-long chart. You can go back longer than a decade, you'll see the same thing. Without fail, this stock has dropped double digits every time it has reached such any overbought readings, and based on everything else, not just that, a lot of everything that I saw in the charts, even with the day Qualcomm popped up due to their favorable ruling in the courts on the judgment against Apple, that I said probably get a little pop above that 182. That was the previous high. Come back in, and there it is. So I had a target of 69.37, and here we hit it. Quick 23% gain. So point being is, not that, hey, if you were in it, took the short, great, covered. I also think there's probably a bounce trade. That's a pretty decent support level, 63.37, give or take. When you have these big moves, and the stock is down, 23% in a few days, you're going to overshoot support levels by a certain amount. But let's look at where it is now, and that is QCOM. 69.96, so right about that level right now. And again, it shows better on the weekly chart here. There's that 63.37 target. So there's very oversold, and more important, at very good support. So that doesn't mean it can't continue to go down, but again, I'm sharing this. If you are bullish on the semis, or you're bullish on Qualcomm, or you're bullish on the market, and you want to know, I can only tell you this is an objective level to step in. It's certainly a good time to cover a short if you had it in 5 days, 23% or even close to a profit, because the stock is oversold now, at least on the near term, not on the weekly, but on the near term charts, and at a pretty solid support level. So there's Qualcomm, but all in all, when you go out to the longer term charts, this is a very toppy looking chart. We had a failed breakout here, a lot like QQQ that I mentioned recently. QQQ broke to new all-time highs, failed that breakout. Fewer things in trading or investing are more bearish than a failed breakout, and that's exactly what we had there. And this is not just a back test of the breakout. This is a complete failure. Yes, there's news headlines involved, but the same news headlines that took it up there, and that does not matter at all. There's a reason technical analysis works, and it has to do with past buyers and sellers where they interacted. And so this those news catalysts and those events just were where they were basically a catalyst for what was already priced into the chart. So that's Qualcomm. Again, let's not focus too much on these two individuals, but they are moving right now. And again, Intel, well, at least Intel's, like I said, Intel's already corrected, so I think, less downside in Intel than a lot of other semis, but make no mistake about it. In the coming months, I think there's a lot more downside in the semis. It's just how, if you think the same thing, and you're in agreement with that analysis, you're just going to have to manage a position where you don't have so much. I see so many posts on the site trading these leveraged ETFs, and they're great. I'll use them too. You know what I like SOXX for is in an IRA account where you're not allowed to short ETFs or stocks. I have a choice. So let's take a PSQ for example. Let's say you have an IRA, $100,000, and you want to be $20,000 of that short in QQQ. Well, since you can't short QQQ, you go buy PSQ. This is a non-leveraged one-time short ETF. Great. So you've burned up $20,000 of your buying power, capital, whatever, maybe 30,000, whatever it is. Or let's say 30,000. It's a round number for what I'm about to use as an example. Or you can step in and buy $10,000 of SQQQ, which is a 3-time leverage. Decay on the index ETFs are not nearly as bad as sector ETFs. And so this is an alternative where therefore you have a $100,000 401k. Buy $10,000 of SQQ, you're 30,000 short the Qs, yet you have $90,000 of your cash to put into diversify into other positions. So there's the benefit there. Now keep in mind the sector ETFs like this one, Nugget and Dust, are notoriously bad for decay when you hold them at the wrong time. If you're new to the site, go to the FAQ page. It's under resources on the main menu. Read FAQs under the ETF related questions. I explain what that decay is, how it works, and usually works against you when you hold these leverage ETFs for a long period of time. But in many instances, it can actually work to your favor, where you can do much better than 300% whatever the index or sector does. And just to be very not to be cryptic here, I can't get into the explanation. Here's when you want to own them. This is in reverse. This is a short one, the bull shares. But in these unidirectional, these strong rips or dips, and sometimes we can identify those with the right setup. When you hold Nugget or Dust during these periods, you will outperform. Oh, it cuts both ways. If you're holding it against, in other words, you don't want to hold Nugget when you're dropping. I'm talking the strong rips and trends. So I will at times, and I'm considering using for the next short trade in the semis, if I feel that we're coming up on a waterfall type sell-off, then I will consider SOXX is the alternative for the next trade idea. Okay, I mentioned REMX, which is the rare earth metals ETF. Yesterday we had a almost divergent low here, about an equal low with bullish divergence there on the PPO and RSI. It's been moving up nice, and today it's pulled back. Somebody asked, where is an objective level to buy? Right about where we are. I have minor support. You can see as I added this line here, I'll show you where that comes in. So you can see we have reactions, popped above there, and then came in and back tested it here. We have a gap right about there. So it's objective. Will pan out, can't promise you, but I can tell you if you liked it yesterday, it's down today about a little over 2%. That's an objective level to add, and swing targets up here. First swing target is 1675, and let's just say my preferred swing target now, maybe a hair. You might want to take it out a little bit below that, around 1650. There's some reactions there to be safe, but that's REMX. And again, just one little sliver of the pie. I like to diversify. I'm a big believer in diversification. If you've got all your money right now in SQQQ or TQQQ or the semis or the VIX, you're going to get whipped around. If you have a little bit of wheat, a little bit of gold, a little bit of semiconductors, individual stocks, bonds, TLT, things I've covered, then you're firing on all cylinders. If one of those cylinders stops working, the engine's still going to run. That's the benefit of diversification. Don't put all your eggs in one basket. All right, next up would be, let's talk about wheat. Very timely exit in wheat yesterday. We hit a high. You can see here the pop-up box to the left should show as I put the crosshair on yesterday's candle. The high of the day was 548. So perfect. Remember, I always set my my sell targets slightly below the actual resistance level. So the line here is at 552, and that's why I made an adjustment 4 cents down. So nice exit on that for those of you that book profits at T2. I also showed you if you didn't check it, I always encourage everyone to come into the site. If you get the email updates as a member, remember some of the charts don't go through. If there are multiple charts attached in a gallery format, you're not going to see them on some of the emails that go out. Depends on your email provider. Come into the site, click on the link, the title to the link of that post, and it'll take you into the site. But I had mentioned here, let me find that for you. Okay. So I followed up under the comment section on the trade update to wheat when it hit the second target shortly after that. We had this resistance here on wheat futures. That's what we're looking at. This is a 120-minute chart of ZW. Those are wheat futures. And we also had a bearish rising wedge. So two things happened yesterday. I was able to get a nice pullback short trade out of that. I told you I first closed all my futures there. My position there actually popped a little bit above there is when the wheat target hit. And then we had a breakdown. So two things occurred. Well, three things. One, we ran up, overbought into resistance. And again, I shared this chart last week or so. Right into a pretty well-defined resistance area, popped it above it a little bit with what I call momentum fueled overshoot. When you have a lot of momentum or velocity going up or down into a support or resistance level, you often tend to overshoot it a little, even if that level will contain prices, which it did. So again, that's what I call momentum fueled overshoot. And then, so what happened next? You had a pretty, very steep, what I call a dangerously steep. When you see a wedge pattern with such a steep slope, that's pretty dangerous. A little too much means we went up a little too much too fast. And so at that point, after hitting the target, two other things happened. We broke both the trend line, the bottom of the wedge, and we broke back down below the 484 level, which was resistance. And when we overshot it, that became support. So that's what's happened with wheat. We came down. I had a little trade I covered there yesterday, short. But now what happens is the wheat trade, WEAT, is at support. And sometimes, I can tell you this, I've traded long enough to know, I don't know about this particular one, but in some cases, the tail wags the dog when it comes to commodities and commodity ETNs. What I mean by that, well, I'll tell you, I believe there's more money in gold GLD than there are in gold futures. I could be wrong on that, but I do know a lot of big professional institutions, hedge funds, institutional investors will use GLD as their proxy. So therefore, inflows and outflows of the ETF gold, which is tracking gold futures, can certainly have an impact on the price of gold, the gold futures. And so with wheat, for example, here's a pullback to support, and this is these ETNs are preferred by a lot of retail traders. I'm guessing institutions will probably lean towards the wheat. I like trading the wheat futures, but yeah, I'll trade these, and if at times, at certain times. But right now we've pulled back to that former first target, which was, as you can see, the line is at 528. The target was 526, but the actual resistance support line's at 528. And so far today, we pulled back to a low of, well, you got it, to the button, 528. So there it is. So we hit my target to the button onto the upside, pulled back to the support level, and you can see it's pretty well-defined support. So where I'm going with this is that is an objective level to add back. The next objective level, it doesn't show here as well, but you go back to the futures chart that I just had up. Let me find that for you again, CW. And it would be here about a really nice level to add, about 460.58 if and when we get there. I suspect we're probably not going to pull back that far. What's happened in wheat, and again, I should have pulled the chart up. I don't have stock charts loaded right now. I have to log in, but I have wheat falling to a very, very long-term support key trend line recently and exploding off that level. So I'm leaning towards another thrust up and then going on to hit my the final target on that wheat trade. Okay, sorry to spend so much time, but I know a lot of people are in these and I just want to share my thoughts. So to make it very clear, I would expect and favor a reversal anywhere from about where we're at now. There's some minor support here. Here's some reactions all the way down to about that 460.58. If you do not have a futures account, go to investing.com, create a free account, and you can replicate charts of wheat futures. They also use the symbol ZW for wheat futures on investing.com. A lot of brokers have it. If you have TD, Ameritrade, Thinkorswim, their trading platform will give you, I believe they'll give you futures. They have most, but not all futures contracts available for their charting platform. Okay, next up, let's talk about the pot stocks. Starting a couple months ago, I started pointing out that MJ, as you can see here in the trading room post, MJ and many of the pot stocks are looking toppy in my opinion, Cron included. Somebody asked about Cron. It's beloved stock for the pot traders, pot stock traders. Cron sell signal coming to break below the uptrend line off the late October lows. Here's my daily chart. So you can see it. There it was. Cron was at $21. Had it coming down here to 13.19. I also I did a couple videos on MJ as well. I'll have to have one of those charts handy. So there's Cron's fallen from there. We broke the trend line. So far it's fallen about 26%. Congrats to caught it. There's a minor trend line here. Not a lot of reactions, but worth noting. So far we reversed a little shy of my target there. I wouldn't, there's not enough meat on the bone left to short it, and if you did short it, this breakout could be the catalyst for a rally, but I expect more downside. In fact, let me just get to MJ. I don't have time to go over all the pot stocks, but this is where I pointed out back here. We had a divergent high on MJ, which is the marijuana ETF, first to market, I believe, and so far the pot stocks as a whole have fallen about down to the lows recently, about 17%. Where it's at today, MJ is kicked back and back testing resistance. This was a former target support that I had here at 34.50. Support once broken becomes resistance. We've already had 1-2 tests of that level, haven't gotten through it yet, and based on the charts, I still favor more downside. Would I short it here? Probably not. It is objective at that level, but maybe if you do short it, watch that trend line. You want it to remain below that trend line. So if it pops above there, it might rally. I don't think we're going to new highs anytime soon. In fact, we may have put in a major top in the pot stocks. They were, if you're new to the site, a couple years back, I was, both, full-blown bullish on the pot stocks and covering those all the time, trading them almost only on the long side. But we had a couple periods where I said we're looking at major tops. We've had sort of a bubble type frenzy for a lot of the names in here, and again, for the time being, I'm near-term bearish, although I wouldn't short it here. I just wanted to do an update there, and if there's enough interest, I will certainly be glad to do a video on the site highlighting some of the individual names, because there's a couple that look okay, and then there's some more that look poised for pretty big drops here. Remember, in this ETF, they're not all pure play pot stocks. You have tobacco companies, Philip Morris, the big Altria that went in, bought them. The spirit companies have now have a hand in here. You have some REITs that lease land to the pot stocks. So it's not just all pot growers. I just want to mention that. There's an eclectic mix of companies related to the cannabis industry in here. So therefore, as I'm trying to say, all the charts aren't equal. Some look better than others. But on balance, I think there's more downside. And to conclude this video, I think the railroads are about to come off the tracks. In fact, I think they've already been derailed, their rally. Here we go. There's a nice, clean, bearish rising wedge. I have this wedge on some of the major railroad stocks too. Similar thing, divergent highs, everything I like to see. Check, check, check. So breakdown, of course, the wedge first, the divergent high, the breakdown, little kickback rally, and I see more downside in the railroad stocks. I'll go over a few real quick for you, whether you want to take them as trades, or maybe I'll make some official trades if I get around to it. But that's UNP. There's same thing, divergent high. I'll have to give you some targets. I don't want to rush any targets here, but let me just tell you right now. Would need to break this level. That's support, and that's a pretty important support. So your sell signal would come on a break below 171.50-ish. You want to be safe. You can wait for that low back from May 13th to be undercut right there. And if and when that level goes, I don't think this one will even pause hardly until it gets down here at about 160, and quite possibly more downside. Yeah, quite possibly more than that. That's UNP. Let's not go into too much detail here. Let me just show you how the similar a lot of these stocks look. And again, put lines here under these recent lows. You'll see gap. So there's a breakaway gap right there. Well, what I believe, I should clarify, probably what's technically known as an exhaustion gap. We'll see. I'd have to study the chart a little more. Here's a breakaway gap, a continuation gap, what looks like to be an exhaustion gap. And also the potential, if we gap down, that looks like a big island. If we have a candle down here, gap down, you could put a big island top in there. So like I said, I'm pretty bearish on the railroads, and the thing is, the train hasn't left the station. All right, last pun, promise. All right, CNI, Canadian National Railway, there's your uptrend line, divergent high. Again, you can see these recent highs. So what I'm seeing here over and over on the big railroads, it looks a lot like the NASDAQ, where it broke out recently to new highs. You can see it took out the 2018 highs, popped to new highs, possibly all-time highs, and hasn't yet failed it. But if they do fail it, they're going to come back down. You can see some of the levels on this chart, and I haven't updated all these charts, guys, so don't hold me to all these levels. I'll have to sharpen my pencil and give you some additional targets if you're interested. And as always, if you are a member of the site, even a silver member, gold members, do me a favor, post chart updates or requests in the trading room so others can see. But silver members, if I do a video, for example this one, anything I cover in that video is fair game. You can ask Randy, can you update CNI? Give me some targets. What are your thoughts on this, or another railroad stock for that matter that I might not cover? All right, let's look at a few more and post those in the comments section below the post. And if I don't always get the notifications. I get buried in behind. If I don't, bump me by email. Use the contact form. Shoot me an email and say, hey, I sent this question on XYZ. Haven't heard back from you, and I'll be glad to get back to you. NSC, Norfolk Southern, breakdown back test, and again, there's a level it needs to take. But I think a lot of these you could maybe start scaling into now. But that would be your next objective sell signal on a break of below 193.85. That would be my first target here around that 184 level, second target right there. So let's just focus on those two targets right now. Or if you want to, we've already back tested and rolled over, you could certainly short here and there, with an appropriate stop above, and there's about a 5% downside to that 193.85. So that could be T1, T2, T3. CP, Canadian Pacific Railway, has yet to break down, but breakdown looks imminent to me. I think this one probably comes all the way down here at about the 210 level, and that's CP, Canadian Pacific. KSU, Kansas City Southern, breakdown, kickback, rally, probably going lower. WAB, there's one. I wouldn't go long right now. We don't have a buy signal, but we have bullish divergence, and this one's already gotten the snot knocked out of it. So here's one that's oversold. They do, I believe, the brakes for train, the air brakes, as I guess their name would imply. It's flirting with some pretty important long-term support. But again, let's move on from it, because I wouldn't go long if the sector's falling, but I definitely wouldn't short this one. I don't think there's enough meat on the bone. GWR, don't have an opinion there. GSH, Guangshen Railway, I don't know if that must be a Chinese railway. I'm not sure. TRN, GBX, again, divergence is building, but no buy signals there. Some of these, related companies have already been moving down. They're already in their own bear market or downtrend. And there's one that could pull back. Let's just leave it there. Let's stop here at rail. Yeah, let's just stop there. So basically, the ones that I like are UNP, CSX, CNI, NSC, CP, and KSU. No, those would be the ones I'd look to short. And if you're going to ask the question, I don't believe there is an ETF specifically to trading the railroad sector. Closest thing out there that I would know can think of is IYT, which has a little of everything: truckers, airlines, and railroad stocks. You can see IYT has already broke down, which is also confirmation. This is what you want to see. If you're going to short a sector like the rails or trucking, it helps to see IYT on a sell signal, and that's where I think IYT is headed down here to at least that 181.41 level in the coming days to weeks. All right, let's wrap it up here. This has been Randy Finney with the right side of the chart. I hope you